Hi, Chris here, your Limey lender from London, England. As already mentioned, ensconced in the depths of sunny Colorado here. And today I wanted to answer the question on when should I lock my interest rate? As that is often asked, once you're under contract on a home, when should you lock the interest rate? My typical answer is sooner rather than later, unless you're a gambler. So mortgage interest rates change every day, and they're not set by us as a financial institution. They're driven by the markets, specifically the trading of the 10-year Treasury note. So these rates fluctuate on a daily basis, just like the stock market. If you don't lock, you're then at the mercy of the markets. The rates could go up, they could go down, or they could stay the same between you going under contract and closing. So I always recommend locking them sooner rather than later, depending on when you are closing, because the rate could change slightly based on how long you need to lock for. A typical purchase transaction takes about 30 days. So we normally get away with a 30-day interest rate lock. However, if you're looking for 45 days or even 60 days, the interest rate may change slightly based on the length of that lock period. If you're not closing for a longer period of time, we do have long-term rate locks as well. Now, the longer you lock the rate, the higher their interest rate could be. We can lock an interest rate up to 12 months for you if you're building a new home through a home builder or a construction loan. That rate won't be the same as if you're locking for 30 days, but it does have a float down option if you're locking for between 121 days and 360 days. That means within 30 days of closing, if the interest rate, the market interest rate is lower at the time from where we locked, we can float down to an eighth of a point above that market interest rate. Now, if you're locking short term, 30, 45, 60 days, we don't have a float down option. We do have a renegotiation policy in case rates do drop drastically between going under contract and closing. It's very rare. The benefit of floating the interest rate, i.e., not locking, is not great in my experience. Sometimes there's minimal gains. You might benefit from floating a couple of days to see you through from a 45-day interest rate lock period to a 30-day interest rate lock period and take advantage of slightly better pricing. But I've never seen huge gains by floating the interest rate rather than locking. So my recommendation is always to lock as soon as you can, as long as you're comfortable. It's entirely up to you, and we can keep you updated on a daily basis on interest rates and pricing for your specific scenario. So feel free to reach out with any questions on that. Otherwise, we'll look forward to speaking with you soon. And thanks again for watching.